Executive summary time. This, of course, means it's John Saville from Acorn Wealth, and here we go. S&P 500 today continued to make new highs and a higher low. Not a very positive close, but nevertheless, we did push up. Of course, we've got the Fed minutes tomorrow. And the S&P 500 has maintained its break above open range. If you don't know what open range is, just go back and study some of our last few videos where we talk about the importance and impact of the first day of the month. Now, if we have a look, though, at something I find very interesting when we're heading towards key areas, is to have a look at the Dow Jones World Index. And it's basically a weighted index of all the world economies, European, Australian, Canada, lumped in on a weighted average. Have a look at what they look like. Now, they have basically generally been a few days ahead of all major moves I've seen in the U.S. economy. The break of the consolidation in May of 2014, the breakdown recently, they always seem to be a little bit ahead. And if you have a look at what the Dow Jones Global Index looks like compared to the S&P, check it out. What are we doing on the S&P 500? We've broken through the open range set on Wednesday, April 1st. Broke it not the next day, but on Monday, April 6th, and then we've had this kind of reversal candle. Now, if we go and have a look at the Dow Jones Global, what you'll see is that we're actually did basically exactly the same. We had open range, but we broke it the very next day on Thursday. Then printed the doji candle, and then break, up, up, up. We've had another up day, consolidation, and now we're looking like we're heading to actually break through the overhead resistance on the Dow Jones Global, which would mean positive movement for the global economy, certainly would bode well for the US. So looking into the US's crystal ball, could we be seeing 3 days more positive like the Dow Jones Global? I think it's quite likely and very potential. So I have been looking, still looking both for the long and the short. So we've got a lot of longs we've discussed recently. Of course, from yesterday's summary, we had quite a few there. So I've also balanced it out with a few extra shorts tonight. We will start with the longs, however, and I'm going to switch over to my default setup. And this is so I can have all the bells and whistles and confusing lines all over the place. So don't mind that. Let's go on to the stocks. Let's firstly look at Mattel. I think Mattel is an interesting long. They've got earnings coming up in the third week of this month. I believe it's actually on the 16th. 16th, Thursday, right before options expiration. So it could be very interesting earnings play, looking at some maybe $24 calls or $25 calls. But I'd be looking to play them later in the month, depending on where the stock moves to. But as an option play, I still like it. But as a stock play, I also like it. I think this has got a great money flow accumulation. We've got basically a bump and run formation, so I expect it to possibly have a little bit of a pullback to the 23.35 zone. However, it could just keep going. We may have already seen the bump into the overhead resistance from this downward channel. And that is usually basically the preface before a big move. So I'm looking at Mattel as something that could rally here from if it breaks $24, $24.40, which would be the down channel. I'm looking at a first target of $26.73. However, this thing could run all the way up to the $28 range. So that's the first target from 24.40 to 26.73. Gives us just a little under 10% kind of pop, and look at a stop loss around that 23.77 area, or even just a little bit lower actually. Yeah, look at the low of that candle of, in fact, 23.53. So look at 23.50 would be where I'd look at that stop loss criteria. So there's Mattel. Again, I think that's a great bump and run formation forming, and that's got 10 to 20% potentially in it. ATLS, a play on the energy. Now, let's have a quick look at Brent crude. West Texas crude. If we go to commodities here, keep in mind that we are basically, even though we have a primary downtrend in the stock, we've got some very interesting action in terms of crude oil. A lot of crude oil stocks have done extremely well over the last few days, and the reason why is that basically we've we've broken a downtrend that's been in place since the break of this head and shoulders pattern, which you'll see if I pull back a little further. This kind of elongated head and shoulders pattern. It broke it in August of 2014 and hasn't recovered any kind of positive movement since the last couple of days. So we've been in this down channel since kind of January or late December, and we've actually broken that on Monday, April 6th. So let's, even though there's a lot of concern over whether oil will recover or not, this is something to take note of. It's a very key break in the oil prices. So I'm not willing to abandon the oil trades until we break back below into that channel. And one of the ones I really liked was ATLS, Atlas Energy. It's got playing into the energy play. Atlas has got a nice little run here on. They did a merger back here, so don't pay too much attention to the previous prices. What we really want to pay attention to is the hourly chart. So we're going to go to the hourly chart. And on Atlas, I think this thing's ready to pop. It's been building slowly. And let's just take these indicators off for a moment. It's been building slowly and has just started to kind of really move. And this is what I want to see in a swing trade, where I can just let it go and run for profits. So I'm looking at this as something around $6.82 with a first target of 7. Let's have a look here. The low of this candle. So I'll tell you why I'm looking at this here in a moment. Just going to zoom in. And what I'm looking for is where the key resistance is. And key resistance is going to show itself when you get breaks of support. So we could say, well, do we want to look at this as a target where that previous resistance was? Or do we look at something different? But look at the resistance. When we bounce down off that, no significant volume. However, if we look at the break of support that actually happened there, look at the volume that came in. As soon as we broke, basically what was the price here? A high of 765, massive volume came in. That's the significant support level we want to pay attention to. So I'd be looking for this to run back up to that resistance around 747. And I'd look at an entry around where we're at basically right now at a break of 683. And I'd look at a stop loss at 646. But from 683 to 747, that's a really juicy potential profit with a minimal risk on the downside in terms of the difference between the price and stop loss. But this could also be a really good run. I'll have a look at the options chain, see if it's something that attracts you. But if it's able to then break through that next level of resistance, it could easily tack on another 10-20%. But in terms of a first target, that 747 level looks like it should easily be hit, and that's where that smart money resistance has shown itself to be. Okay, now to the shorts. We've got two there on the longs, so 2 for the shorts as well. Let's look at, let's go over to our daily chart again. Now this is also an oil play. We're looking at, I believe this first one's an oil play. Let's just double check. Okay, let's have a look. TCO. No, this is actually the retail supermarkets. So yeah, this is actually a retail. They manage retail and commercial properties. They're brick and mortar kind of stuff. And again, if you look at where the customers are going, where the consumer is going, they're trying to save money. They're certainly not wandering around supermarkets all around the world and doing their shopping that way. A lot of people are shopping online these days. They estimate that 65% of shopping is done online, and a lot of the people that go to supermarkets are just looking at the products before they go and buy them online. What you may see here as well is that we've got a possible head and shoulders pattern in the macro time frame going from October through December for the left shoulder. There's the head, and then we get a March right shoulder potentially forming. And we saw the breakdown start to happen today to some intermediate support. So if we came down and broke through 72, this could be an extension all the way down to as low as $62, which coincidentally, or maybe not so much, is where the support was back here. So as we look at the kind of intermediate move, there's some several attractive things about it. A, it's been performing badly in a good market. So I think that from where the current prices are at, or if it was to break slightly lower tomorrow, so from basically 75.37 and under, those prices I'm looking at, I'm looking for a breakdown to at least 81.13. A breakdown to at least 68.17. So let's say, looking at the price levels, a break of 74.94 would be my entry. Looking to a breakdown of a first target of 68.17, and my second target, based on that head and shoulders, would be 64.52. So I like this one. I think this has got some good guts moving against the market. And my other one here was actually on DENNYS. And DENNYS has really kind of been in a substantial uptrend for a while. It hasn't been able to regain, though, its strength. If we just take these lines off to just simplify this a little bit, you'll see that DENNYS has not been able to get back to the highs of its previous channel. So it was moving up in a channel, kept testing the lows, but that started to fade. It faked out, broke below the channel, and rallied back up in, probably crushing some people's stop losses into open range of the month. But now we've come back below. Now I wouldn't jump into it too quickly, because chasing these stocks that have broken down from an uptrend can be painful, because they'll hug that uptrend line like glue and stop people out. So I would wait for it to break the low of this candle here, this fake out. So if we break below 1150, so trade below 1150, I'd be looking at a target of 1013. So that's a good 14% drop, and I'd throw the stop loss up in around 1187, which is just above the zone it's dropping out of. Now, a couple of others that I've got on my watch list, just for those of you who are starting to look at what's happening if the market does turn. GROUPON is one that I'm looking at. Tesoro Petroleum is another one I'm looking at also for a short. And as I mentioned, GROUPON, if this one starts to break significantly below its support level here around what are we looking at, around 682, this could be an interesting short. But those are just watches for now. The first four we've talked about are the ones I'm most excited about, and that pretty much sums it up for tonight's report. So make sure you do register for our workshop coming up on Thursday, which is the secret sauce of trading, how we find these types of trades. The link will be below or in the email if you received it via that way. So make sure you do register for that, so we can teach you how we start to find some of these things. Again, have a great night. Happy trading.